What's up, YouTube? Today we're going to be trying to buy a piece of real estate while sitting on the couch, just like usual. Looking for something to throw $1,000 at. That's just the size that I've chosen for properties that I like. If you haven't been here before, talking about fractional investing on online, the site I'm going to be looking at today is on Lofty, lofty.ai. I've got a link in the description where you can get a free token on there if you haven't done that already. If you don't know who I am, but you're watching this for some reason, don't go away yet. Let me tell you about why you should be here. I've been investing in real estate for just about 20 years. Been in the industry that whole time as an employee as well, or as a business owner too, selling it, helping people with that, all that sort of thing, with investment properties, commercial properties, basically the whole spectrum. At the moment, I spend all day during at my day job helping people buy investment properties in San Antonio, Texas. But I'm looking for alternatives for when clients and friends, family members come to me and they're not ready to buy that investment property yet and want to just buy a piece of something online. There's some great choices today where we never had them. Yesterday I was talking about Landa. Arrived Homes was one, although one I chose not to invest on. Ground Floor, which there's a link for that one also below, but it is where you can invest in debt. But I've been spending a lot of time on Lofty just because it's one of the ones I like the most. But as I've warned several times, you really have to do some due diligence on the properties themselves. Today, I'm going to look at what happened. Yep, this specific one. You can see it's showing up as no price, and that's because it's a new issue. So they're going to be priced at $50, um, which is what all their new issue tokens are for. And so when I say $1,000, I'll just buy 20 tokens. I mean, that's as you can buy as many or as few as you want. You can really try to diversify and buy just a tiny bit of each one. But I think that if you do that, then it doesn't really make sense to spend the kind of time on it looking at the properties that I think is really required, because this is a marketplace. And, I've sort of started to think of Lofty as um, somewhat like the eBay of real estate, right? Like they're just providing this service where anybody can come on here, list a property. There is you kind of have to figure out how legitimate that listing is. I think Lofty's done some diligence as far as like, do they actually own that property? Are there? I think they're verifying some of their claims, although it's not completely clear to me what they do and don't verify. But it's really up to us to understand what that underlying asset is, what that piece of real estate is. Um, I think this is going to be an interesting one today. It is a short-term rental. It's one that's operating. I found the listing for it, and actually they provide the listing, and it looks great. I looked on AirDNA, and it looks like they're actually making money. But this is something that I thought was kind of strange, right? Like it's listed 4 bedrooms, 2.5 baths. If it wasn't for this one issue, I think I would have pulled the trigger already. But I'm going to go through a lot of the due diligence that I did, just because that's what I think that everybody should be doing. Um, so the first thing we did, just read the whole description, look at every document, click on every link. I think that you should be doing that on every single one of these that you buy. One of the things that was interesting is they describe it as a single family home, uh, 4 beds, 2.5 baths. But when we got down to, he's describing it more, and a property was burned down, and I built two twin homes on the property. And if you're not familiar with twins, this is something that doesn't exist everywhere, but a couple places that I've worked, it's really common. And so I'm not sure how common it is in other markets, but it's basically it's a duplex, but each half of the duplex is owned separately. And so, I know when I lived in New Jersey, twins were really common, and they were owned separate in fee simple, meaning like it wasn't a condo, that wasn't, anything, any different sort of ownership structure. You just both owned your property and shared a wall. Usually, you had what's called a party wall agreement. That is how you basically, outlined how you would share responsibility for that shared wall. Um, in this, when I looked into it, they I don't think they're trying to hide this. I think when they call it a single family home up here, um, it's still some people might consider that a single family home. I think of it as it's an attached home. you're getting half of a duplex basically. But if you looked, when I looked at the appraisal, they share all these documents, right? And so I looked at the deed, let's see, and it says, so you can look at the deed to see what they're conveying. And what they actually were conveying was Unit 1. And where is it in here? Did I miss it already? Um, yeah, all of Unit 1 of 999 Canyon Road subdivision, which is a PUD, means planned unit development. It's not a condo. You typically, and I think what a PUD, how it works exactly, might vary state to state. But my understanding, you actually own the land underneath you, but then there's common areas that are owned um, by basically an HOA, similar to how a condo works, except that it's not air rights. It is actually fee simple, the part that you own, I believe. I'm actually not 100% certain that that's how it works, but that's from my research, that's what I figured out. It is, and from here you can read, and this is the appraisal, where he says, let's see, where's his actual opinion of value? Well, let me show you this comment first. He says all the comps are other townhome style units, so he's looking at townhomes to get comps. The subject is a very small 2 unit development, so it is just that, it's just the duplex that you get half of. Um, that this was, it took me a little while to really verify. I wanted to be sure. One of the things that, if you're on Lofty and you're on the Discord, which I, really encourage you to do, you can ask the owner. I actually posted a question in there a couple of days ago, but I didn't get a response. It looks like he has been responding to questions though, so I think it's probably just a matter of time. Um, Sale price 261. I always hate the way that different appraisals are presented. But yeah, so cost approach 505, or actually sales comparison approach 505, cost approach 506. He did an income approach too, so 514. So actually like that, he did all three approaches. They're somewhat similar, and we know that he's not. So sometimes appraisals will be appraising a somewhat hypothetical value. They'll say, "Hey, we're going to appraise this as if it were this, but what you're really getting is that." And but this is, you can tell he's saying I'm appraising it like it's a townhome basically, and so that made me feel good about that value. Um, and then we can look at the financials and see, what the total investment is, and we look over here and see that that matches up with the market cap, right? 543. Oops, where'd we go? 543. The reason I wanted to verify that is because we don't have the little market cap button on here, and it's because it's not being traded yet. It's just they're just issuing it's like the initial issuance of them. Um, so yeah, so that was my first thing. So I'm looking at this and I'm like, okay, what am I really buying? It turns out I'm not getting a single family home. I'm getting part of a property, and I think this might make it a little bit more clear. So you actually have uh, you're buying a piece of, this is the property here, and you're getting half of it, half a yard. And actually, it's kind of interesting because when you look at, let's see, they had one more document in their docs, and yeah, you really, they provide a lot of due diligence. I encourage you to look at every single item. Like I said, I mean, when I do these videos, I'm trying not to, I'm trying to not take 4 hours for every property that I show you, and just show you sort of what I think are the highlights. On their title report, and this was one of the first things that kind of clued me in, uh, other than that description too, but so normally they'd have an exhibit A, but I think because it's a PUD, you don't really have a legal description. It's just unit 1. But they also show you like this, this isn't above the, looking down on it, a floor plan. You can see the shape of the concrete pad. Um, this is something that I was curious about because when I look at this, that makes it look more like this one to me than this one. Um, and you have that garage bump out. So I think it's actually this side, even though the address shows up here. And when I look at the pictures, though, um, yeah, it looks like you're getting the picture from this side of it, right? Um, it's tough to be exactly sure, but I think that's what it is. I think it's this side, which um, is here. But does it really matter? I'll show you why I'm kind of hung up on that a little bit. So this is the Airbnb listing that they shared with us, and so I just want to make sure, is this the listing that's for the side that we're looking at? And that's again, I don't think they're trying. In general, I'm not too worried that people are trying to mislead us, but I think that there's the potential to be confused about what's going on here, especially when you look at it and it says it's a single family home initially. But yeah, you have this big piece of lawn, which I think corresponds to this side yard a lot more than it does this. So yeah, I think this is the side that we have. Um, when we look on AirDNA, we'll see, one of the things that I'm curious about is this owner, does he still own the other side? Is he operating that? Um, one reason I might be a little concerned about that is if he has the opportunity to keep one side more full than the other, which you almost always will, right? You could just move the bookings to the side that you own more than the other side. Now, I'd like to think most people wouldn't do that, but I think it's a risk of buying something. And you can see, so this is why I was attracted to this, right? Like it is a very picturesque town. One of the things that he's got in his listing is that he has um, a snow basin ski pass that comes with the rental. I don't know what that costs, but one of the things I'd want to think about is if somebody else ended up managing this in the future, what would that cost us to provide? I don't really know, but it's something that if I were going to put a lot of money into this, I'd want to know the answer to that. Um, One of the things we always try to do is figure out, what's the value of this real estate, right? Like if we have to liquidate this property, what's the value? And so, I always like to go to homes.com first. This is a situation where they're very confused about what this property is. They think it's an 8 bedroom, 6 bath, 300 or 3,784 square foot property. Let's go back and look at what they actually say we're getting. 1890. Yeah, we're getting half of that, right? So obviously this homes.com valuation is no good. Uh, and it's only 100,000 higher than what we're paying, and so that worries me a little bit. But also checked Zillow. Zillow had no estimate for it. I'm not too surprised. I found that in a lot of markets they're not as consistent as they are here in Texas. My guess is that they don't have the same agreement for the feeds. I don't know that that's what the case is. I think it's possible I'm doing something wrong on Zillow and other markets. I really don't know. I mean, you can see this a sale in 2018, so I don't know. I'm really not sure what's going on there. But they assess value 3,500. It's definitely just being assessed as, or 35,000, excuse me. I think it's just being assessed as vacant land right now. I can't imagine that their assessment is that far off otherwise. Um, oh, I got a leaf blower in the backyard. Hopefully that's not making too much noise. But so then I looked at Redfin. Redfin knows the right number of beds and baths and the square footage, and they're giving us the same estimate as Homes.com was, which is the one I usually like, for a similar estimate for half of the size property. Um, this is really confusing, right? Like, I don't understand how it can be so far off. Now, and obviously, too, they're just showing us this front picture. Um, what I think is I wouldn't really trust any of these because I don't think these third-party sites have a great idea of what they have. Um, Obviously the appraisal was good, right? Like I think that he's really appraising um, at least it appears that he's appraising the actual interest that we have. And so then that total price is, how did they come up with that total price? Um, Underlying asset 530. So they are charging us more than that appraised value. And then closing costs and inspection and appraisal, the DAO fees. This is interesting. I know one of the things that they mention in this listing, let's go back out to here, in the details, is that the closing costs include an additional 11,250 for the furniture. Oh, and that didn't open the right thing. Let's try that one more time and see if it does. Which can be, I think that's like, yeah, but I think that they put it in this lockbox or in this Dropbox, and I'm really having some problems today, huh? Telling you all that's not right. Loss, appraisal, inspection, insurance, property management, title, warranty deed. Oh, right here, furniture invoices. And let's see. Uh, like they have two. They look the same, but let's see. Oh, no, I think we're going to see two different ones. So 6,961. And we got some stuff here. You see the bullfrog spa. Oh, that's interesting. For driftwood, for kitchen, covered stuff, set balance kit. So, and there's the other. So those two together, um, you could do some math if you're skeptical. Yeah, they actually look, it's just a portion of what was purchased. So it's not even, it's not, those two together add up to more than that number. It's one of the things I expect when I'm buying a short-term rental, right? If it's operating, if it already has all this personal property, then yeah, I don't mind paying a little bit more than the real estate cost because I'm getting, an operating business. Um, there are some risks that come with that. Could somebody else operate it just as well as he could? And that's one of the things I'm a little scared of with this property. Let's take a look at this. This is the Air DNA report. Actually going to move this to 2.5 baths because I think it's 4 bedrooms, 2.5 baths, 8 guests. I'm going to update that. And you can see we actually do have, it looks like maybe this is both of his units are operating. It looks like this is the other side. I'm not positive. Let's look at this one and look at the pictures. Remember, are we going to have to go out? We might actually have to go out and look at Airbnb and find this. Oh, can I link? They just always change this on me. All right, so this is the photos. Yeah, see, and you can see the picture. It looks like this is the side we're not buying, right? They're like picturing this front door, and I think the other one, even though the inside is nearly indistinguishable. So that side's being operated, and then let's just open this back up. It always goes a little bit slow when I'm screen recording. So that was this one, and then I think this one here, and you can actually see that other one had a little bit higher revenue than this one did too. Is he selling it because it's the worst performer? It seems unlikely, right? Like it's two units next to each other. They should, over the long run, operate exactly the same. You can see here, though, the outside front picture is different. I think that's to alert guests that, hey, you're staying in this side. So I think it's amazing to see, okay, you've got, I'm not sure if that's something, I keep closing that, and it's like, it looks like a pop-up with just but this one, I guess, just operates where I need to be using the front and back arrow. So sorry about that. Um, It's great that he's got two operating, and they're pretty similar income wise. But if you look at every other comp, they're all much lower. And so it does worry me a little bit about, and and one, some have this is new construction and with a hot tub and it's lower. Although I don't think that's the same one. So it does worry me a little bit that if the current owner didn't continue to manage it, you know, or if we had to get a new manager, is it going to continue to operate well? And then one thing that I always like to look at is, all right, what's the revenue to price? So let's say let's just say 60,000, and then our price was like around 550,000. I know it's not exact, but I'm just don't want to. Okay, that's only about an 11% revenue to price ratio. Um, to me, buying an Airbnb, I want to see a much, much higher number. I want to be getting into the high teens, very much approaching 20. And so, um, the fact that it's as low as it is already, and, um, and on top of that, you're, way higher than the other comps. It made me a little bit nervous. I think it makes some sense that it's higher than the comps because you purpose built it. You have a great view. You've got a hot tub on each one. But I mean, it doesn't seem like there's a lot of upside, and so that really worried me about this one. I think at the end of the day, I think I'm probably not going to buy any tokens in this. We're not getting a discount to the existing value. We're actually paying a small premium. Um, the returns look good right now, but it's because it's because of the way that the leverage currently works, right? I mean, so these are the outstanding tokens, and this is the lofty wallet that holds the debt that can be um, given out, and so if you gave out all that debt. What is going on? Let me see. Maybe I'm doing some gorilla math here. Let's see. Let's go. If we just go to the overview, this looks right. So if we have 10,870 times 50, because this is the outstanding tokens, yeah, that ends up being the right math there. So 10,870. So how much is still not out, or how much is left in debt, right? I'm going to build a calculator in Excel for this, so I don't always have to just do this. But so we have 5501. This is what represents the debt, divided by 10,870. So yeah, it's a little bit more than 50% levered. And we could figure that out a different way too. We can look in the financials and look at the total debt. And so it's good to match those up. And that matches up really, really closely, right? Current loan, 2705. Multiply that by the 543, 500. Yeah. Yeah, perfect. Okay, so that's matching up, which is always good. I like to check all of it because it is, um, very much a lot of these little things have quirks and break or don't necessarily work exactly the way that you think they will. Well, that's interesting. Now I've got an order book. I didn't have this before. This is when I was looking at the market cap, I was like, oh, well, we don't have it. All right. So that's super interesting that popped up during the course of doing this. In any case, so how are they getting such a high rental yield when my revenue to price is only about 10%? What are they doing here? Let's take a look. Annual gross revenue, 74,512. That's significantly higher than what we saw in AirDNA. I think they are annualizing more recent months, and that's how they're getting this, but I'm not 100% sure. We can look at their financials. Oh, no, we can look in the documents. Let's see. Let's look at this. Back and see. Oh, Back again. One more time. There we go. Profit and loss statements, and see what they provided here. Um, yeah, they've got a year-to-date number. Did they just annualize this? That doesn't seem right. And they're looking at gross revenue. Um, And so that's one of the things I always want to understand, where this is coming from. And it's stuff that when I ask the question, I can usually get answers, and it's just not clear from when I look at the site, just as somebody who's not been on here a whole bunch yet. But so, okay, they're using a number that's even higher than the Air DNA number. We already talked about, I think that's a high number relative to the comps. But maybe this is true. There still might be ramping up, taking out property taxes, homeowners insurance, their management fee. Okay, that's good. They're accounting for that. This is only at 10%. If you looked in the notes, I think in the future he's planning on moving that up to 25%. And so this is something else we want to look at. Let's see if that's true or if I'm remembering a different property. So here's the property management agreement. Yep, they're charging 10% gross monthly right now, but in the future it's going to be 25%. So where are we here? So this number is going to more than double. It's going to go up by 2.5 times. They do have the utilities in here, which is good. They never include any repairs or maintenance, which you're going to have those things come up. Yes, we have you have a reserve, but that has to get refilled. And so that gets us to this cap rate, but there's no repairs and maintenance built into this, and so that's one thing, or supplies, or you do have your utilities. I wonder what's included in that. Um, but so this number is really inflated, which is why this number is, and how much it is, especially if I'm looking at holding this long term, right? Because this is this going up by 2.5 times is a huge difference. And so you really have to look at all this nuance when you're looking at these properties, and this is one that that's going to get worse. And then if they do end up paying off debt, although I think he said he wasn't planning to, um, property leverage, the loan balance, equity percentage, and property increase. He doesn't plan on paying any down, which is good, right? Because if he was, you'd be in a little bit more trouble as far as getting diluted anytime soon. But so, you know, you'd have to do some of your own math to really figure out what you think a real number is here, right? Projected in cap rate. And then, yeah, until it gets diluted more, you can almost double it because you've got the 50% leverage in the way that it's treated. So I think that you still get a fairly decent yield, but it's not going to be nearly this number over the long run. Um, because of that, and because we're not getting a big discount, uh, we're not getting any discount to the property value. And one other thing that I looked at is, the housing market trend in Ogden. We've seen this. I think we looked at this. It's a little bit more of a pronounced bump than, which means they had a little bit more of a downturn than some other places that we looked at, but still fairly flat. I'm not worried about this, but I'm also not like super excited about the outlook. It's gone up 2.7% last year. Um, you know, I, I'm just not super excited about that outlook overall. It's too bad. I think he's doing a really good job running this property. I think the price relative to the revenue available in that market is just not great. I mean, and maybe I'm spoiled being in San Antonio, but we can most of the time find properties where your revenue to price ratio is going to be significantly higher than 10%. Um, and then it's a matter of, what are you looking at for comps? Can we get higher? But I mean, he's already at the top of the comps. If you just took AirDNA's word for it, um, let's see. Like, right, I'm actually looking at the comps provided, but AirDNA just thinks it's going to be even like half of what he's making, right? And so I'm perfectly comfortable believing he's going to beat this number, because he's already doing it with 2 units, right? But beating these two, I mean, I don't know, and by a significant amount. Um, One thing, and I guess it's something that we could ask on the Discord too, is, is he doing or a lot of direct booking or direct rebooking where he's got income coming that's not showing up through Air DNA? And let's see where this is coming from here. Yeah, he's just got a gross number though. He's not even telling us. He's got supplies built in here. I wonder if these flow through anywhere onto the financials and we just don't see them. I don't. I think the answer is no. But so really, because one, I don't really like that I'm buying half of a property. I think it's an ownership structure that sort of hurts your long-term appreciation in most markets, especially if this is one where there aren't very many comparables. Um, I'm not super excited about the yield as an Airbnb, because I don't really believe this number is going to hold up. Um, we're not getting a big discount on the value, so this is one I'm just not going to pull the trigger on today. I am. I'm somewhat interested because I think that he's doing a great job. I'll definitely watch this one, and if tokens come down, I'll be buying some. Um, Trying to think about if there's that's one of the things. Like, I think there's just opportunities. I think that it's something. This isn't completely wasted time, right? This is a property now that we have some info on. Um, Numbers could go up. Like, let's say a year from now, he's actually hitting those higher financials. These estimates that they're projecting. Um, that would be amazing. I think one of the problems, especially with the way short-term rentals are presented, is they are, um, it doesn't appear that they're using a trailing 12 as how they're getting to your number, and so your yields on here seem like they might fluctuate based on each month's collections, which doesn't really make a lot of sense, especially on properties that have any sort of seasonality. So in any case, not going to buy this one today. I'm going to have to keep looking. I'm interested if anybody else is buying this. I know a couple of people that are investors on Lofty have started watching some of these videos. If you are buying some, let me know below. Really like to know why, what your reasoning was. But anyway, until next time, I'm going to keep making mistakes so that you don't have to.